Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 29th of March, 2017, and we're just after 2 p.m. Central Daylight Time, probably closer to 2:15 at this point. Okay, as we look at the markets, and I'm just turning my head here to the energies, getting a bit of a bounce there, which is good news because it takes away some of the deflationary thoughts on the gold. While the gold market is down, it's well off the day's lows, near, in fact, the day's highs. Same in the silver market. The markets have come back a bit. Even with the stock market, what I call schizophrenic, different types of markets. Powerful market in the NASDAQ, weak market in the Dow and the S&P, the middle of the road. But dollar index higher, not dramatically so, and currency markets lower. We're going to have to see what that all means to these. As we go to the gold chart, I'm going to keep reminding you to look at and see on Sunday night, did we get a bullish crossover? Remember, this is a weekly chart. We don't have it yet. We want to get the 18 over the 100 to get bullish this market. Right now, I say that because you're at least over this number. Now, the last rally high was $1264.90. We're $12 away from that, so it's not going to be easy to get up and over that in the next 2 days. When we take a look at a daily chart of closes now, this is different than a weekly chart. We've gone from 1200 to 1258.80, and we're slipping a little bit from there, about $3. Okay. And when we take a look at the daily action, you can see how the markets come up, and the question is, can it get through this layer of resistance, or does this become a top and the market starts dropping back down on it? That's going to be what we look at. In terms of a swing line, you know, I went on today to some other websites, some very well-known ones. I can't believe how many people do what I do, and that's good. They talk about what makes a trend. And what makes a trend are higher highs and higher lows. What they don't have is they're trying to take you to this chart and say, well, here's your low, here's your low. I don't believe in that. And the reason I don't believe in it is because it's like a cloud formation. You ever look at the clouds? My wife does this, and she says, look at that, it looks like a puppy dog. Today it's a puppy dog, tomorrow it's a mix master. Who the heck knows what it is? Here's what I go by. Quantitative analysis. It's real simple. The way this is set up, it's either got a pattern of lower highs or higher lows and higher highs or whatever it is. And the apexes show with this swing line. And that's why I wrote this study. I didn't want to get into the point where today this is the bottom, tomorrow it's not the bottom, it's instead this one. This is how it works. And until you take out 1243.70, the pattern on the chart is crystal clear. Higher lows, higher highs. Another way to look at it, the risk in being long the market before that pattern breaks from here is from 1255.80 to 1243.60, one tick under that low. When I look at where the 18-day average is, and I use that, if you will, on the swing line to filter it and say, listen, if the swing line's up, I want to make sure that the bias is up. And the bias is up because prices are over the 18-day average of closes. Now, while this might be support, also, because it's under 1243.70, the pattern, the bullish pattern would be broken if prices should retreat there. In terms of resistance, the Bollinger Band, the black dashed line here, and it's a bottom also, that should capture price 95% of the time. So it's a pretty good idea of where theoretical resistance or support will come in, and the algorithm math will work 95% of the time in the sense that prices will trade within those bands. Now here's something extremely important. Today the market embedded. Now this is crucial, and I teach this in my charting course. By the way, if you're interested in the charting course, go to our website, www.iraepstein.com. Under the word education, look at the charting course. I have some videos there, I answer a lot of facts, FAQ questions that I think you'll get a kick out of, and it tells you how the whole course works. And I have chapters devoted to this. I have 54 chapters of videos that teach you these techniques in a lot more detail and a lot more stuff included in the course than you're just seeing here in the highlights. But you've switched the gear now from being overbought to locking in a trend that can only be lost when the 18-day average closes under the number 80. Got it? So that tells me that the market is what? It's in a buy mode. I would not be surprised to see traders reach up and buy over today's highs, trying to drive the market to the upper Bollinger Band when a pattern like that develops. The same thing has happened in the gold ETF. Important to take note of. You want to see prices continue to the upside, not to the downside, but you've locked in that embedded reading. The gold miners do not have it, and I think I was very crystal clear yesterday about this. Now, what is interesting in the gold miners is notice how the 18-day average in red is doing its best to get over the 100-day. If it does that, and if prices can lift from here, that would be the bullish element that you need in this chart. You're not there yet, so this is the laggard of the three. Then on the gold-silver ratio, you're continuing to see silver gain on the gold, and that's what happens when you make a peak and the market comes down. I want you to also look at these lines. This is just the gold-silver ratio, no study on it at all. Doesn't it remind you of what the swing line does? It gives you an idea of where highs and lows are. And when you broke through this low, the market began its descent. When you look at silver, the market is fighting a battle at the upper Bollinger Band, and had I plotted the 200-day average of closes, that's there also. It's a big resistance area, a problem area for the silver. It is overbought, unlike the gold market. Got to be very careful about buying it right here. In the ETF, same thing. You're up against some key averages, the upper Bollinger Band, and you're very overbought. That does not mean the trend is turning down. It just means what I said. You're very overbought and into resistance. In the copper market, here too you are now overbought. Copper's probably waiting for Friday morning's Chinese PMI, Purchasing Managers Index, to see are things picking up in industry. If they are, that could be the bullish element it's looking for. However, until that occurs, overall, notice how sideways the dashed black lines are, and that's what you're fighting. You're fighting a market that doesn't want to follow through one side or the other reality. Wrote about a bunch of these type of trades that have been taking place in the month of March, which has made trading harder this month than normal. But that's what you got. And you got a lower low and a higher high. That's not a trend. The market came down, did challenge the 100-day average, the lower Bollinger Band, picked itself back up. Anyone that thought it was going to follow through, it didn't. Then we get to the platinum market, which has suddenly now got a higher high and a lower low. Lost its trend completely, but it's run right back to the 18-day average of closes, trying to figure out what it does when it grows up. Now, the interesting part, too, is you had a bearish crossover. Watch this, 18 under. Prices, though, were over everything. So even though the moving averages crossed over, price never did, and I don't consider it getting under it now going to be important to that type of crossover. In the palladium market, this is still a bullish type market, but it's not as bullish as you think because it's overbought. It has a pattern here, and I'm wrong on this. I checked it. This number right there is 941.80, 940.70. So you really have a pattern of a lower low and a higher high. And I checked it just before showtime. I had this wrong. I'm going to correct it for tomorrow's show. But since I've had this up here a few days, I want to admit that I had that part of it wrong. And by the way, there's no trade that I've seen out of it. In the dollar index, this rally's interesting. You had a bearish embedded reading through Tuesday. Today is Wednesday. You're losing it right now. Does the market regain it? The only time it can regain it before starting the whole process over, if it's going to get bearish again like that, is tomorrow. So this rally, as it fades away, and the question is how much does it fade, got to keep your eye on it. It could easily come back into that with a break tomorrow under today's lows, but you got to see if that's going to happen or not. So I put that all together try to figure out what to do, look at some of these rules as they're starting to shape up, and try to make something out of it. But not only do I do that, you see this? It's a one-year subscription, daily market focus. It's part and parcel of a magazine called Modern Trader. And it comes out each month. In fact, I'm waiting for the May issue, and then we'll put it up on the screen. This is the April issue, and I realize we're only in March, but this is the April. It's odd lots. It's buying different stocks, selling RL, I think it's Ralph Lauren there, option trades, Forex, cycles, what about China, earnings. So don't think it's just commodities. It's stocks and commodities, and obviously it talks about, like there, the gold platinum spread, patterns in charts. It's a technical magazine that you're going to understand. There are others out there that are so complex that unless you're a math genius, you get lost in them. This is not one of those. How do you get it? Give us a call. Go to our website. You can click up here if you're watching me on YouTube. It's a $79.95 value. It's going to come to you by email. What could be simpler? You can print it out if you need, but I think you'll see that the reader they've built into it just flips the pages. If you've got one of the big screens like I have, it's an absolute pleasure. Have a great day, and I'll talk to you later.